Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's talk about what has happened today and what we can expect moving forward. So with all that being said, if you enjoyed the video, find it useful, helpful, informative, or whatever, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, if you're interested, my link to my membership section is live in the description below. For $2.99 a month, you get access to all my intraday thoughts, posts, updates, technical analysis, options flow, etc. Every single day the market is open on Tesla stock constantly. So yeah, if you're interested in getting these kind of updates, pretty much as the stock is trading every single day, the link is down below for just essentially $3 a month. But jumping into it, Tesla closing the day, unfortunately down 1.5%, putting us at pretty much $172 per share. Up ever so slightly after market, just above 172 now, but compared to the market itself, definitely, an underperformance of a day. But let's talk about the actual chart itself and what we can expect moving forward. By the way, quick mention, this is pretty cool. So Aaron Levi, who is the CEO of Box, I'm not really sure what Box is personally. He's got a lot of followers, so clearly he's someone. But he just posted how he said finally got around to trying the latest FSD, full self-driving, of course, last night. Can confirm it's wild. And then Phil Dwan over here, who is working on Tesla Autopilot, right, FSD, etc., said, with the reply, of course, it's going to get real wild. So I don't know. I'm excited personally. I mean, I don't know. It's one thing when you hear Elon say that because he's always, very optimistic, which it's cool to see, but it's different when you see someone like him say that for all we know is maybe more realistic, but, truly sees that next stage. And man, it's going to get wild. So pretty exciting stuff. But moving over to the actual chart itself, let's discuss what we can expect moving forward. So let's talk about this bands regression first, right? So there's a few things to talk about. So again, we were trading all the way up in this range over here. I was talking about many times how we're just substantially overbought, right? Even when we corrected back down to the low 180s, I kept talking about how, there's a chance we run up, but we're still overbought. I still expect at the very least to, bleed down. We ended up coming down a little bit faster than I expected, but nonetheless, we ultimately came down to my main target I've been talking about, which is the mid to low 170s. That's exactly where we are still, even after today, closing out again 172. So the most important things to notice here is, of course, the same things we talked about yesterday, plus a pretty important one. So the obvious things are, of course, well, we're still trading at this volume profile over here with this massive volume spike, which is good. We came back down to that point of control area, so far holding that general area, and that's a good sign. As long as we continue holding that, I think that's a good sign for Tesla. And, in my opinion, it's starting to get to a position where it might actually start moving up a little bit sooner than I expected, assuming we continue holding this area. If we fall below 170s and we start entering the 160s, then that, blast off, if you will, back up to high 190s, 205, potentially even 220. Maybe it'll take a little bit longer than I initially anticipated. But holding above 170, in my opinion, is very, very important and would be ideal for the bullish scenario. On top of that, we are still closing pretty much right around that 50-day moving average. We're half a dollar below it, of course, but it's close enough, at least for now. I wouldn't count that as like a bearish thing just yet. We're pretty much right at it, right? But the most important thing in my eyes is the fact that, so this bands regression, let me remove this 50-day moving average for now, but we have this bands regression, right? Literally one of my favorite, if not my favorite indicator, right? So it shows the range that we can trade at, right? Obviously earnings and major catalysts can offset it, of course, as with anything else, nothing is guaranteed. There's no one indicator to rule them all, essentially, but it's pretty darn good whenever you get to overbought or oversold territories. Now we're, of course, kind of right in the middle, right? Right in the middle. We're not overbought, we're not oversold, but we're above that middle white line, which is, again, roughly that 20-day moving average, right? It moves pretty damn close to it. Now, the fact that we're trading above it, yesterday we bounced off of it almost to perfection, and today we're still holding back above it, is a good sign. To me, the ideal scenario is we hold above 170, not because I just, I don't want to lose this volume profile, and I don't want to lose the 170s in general, but I also ideally would not want to be closing below this white line, which again is pretty much that 20-day moving average. Holding above that is going to be, in my eyes, pretty damn important. So as long as that can maintain its hold, I think Tesla is actually setting up for a pretty damn good jump from here somewhat relatively soon. Again, timing, who the hell knows? I don't know when. Could be next week, could be tomorrow. I have no idea. But what I do know is the fact that as long as we hold this area, as long as we hold above this white line and essentially above 170, it's looking good for a potential decent pump relatively soon. Again, I just don't know how soon. So that's the main thing I'm looking at right now. On top of that, right, and this is the thing that just happened today, is if we just look at only the daily candles, just these two daily candles right here, what do you notice, right? It should be instantly in your head the second you see this. If you're someone that does technical analysis, if you trade off technical analysis, of course, which I'm assuming most of you do, Second, you see these two candles, something instantly should be popping into your mind, and that's going to be, of course, an inside day candle, right? Inside day candle is, of course, when one candle, which is today, trades within the range of the previous candle, which, of course, is yesterday, which you can see right here. We pretty much traded exactly within the range of yesterday's candle, right? So that's important to understand, right? We traded within yesterday's candle, yesterday's range, if you will, right? Yesterday's range was 176 down to about 170, and we traded today as high as 175.6 down to as low as 171.4. So it's an inside day candle. And these inside day candles are pretty important. And the reason they're pretty important is because they usually, as you can see here, key takeaways, right? When occurs when a candlestick pattern forms on a given day within the bounds of the previous day's highs and lows. Keep in mind, keyword highs and lows, not the literal candle itself, but highs and lows, which includes the wicks. The inside day pattern indicates a small trading range in the previous blah, often signaling some consolidation. A series of inside day candles can indicate an imminent trend reversal. Right? The keyword is series, but usually even just having one like this is a potential sign for it, right? Obviously, we need to see follow through tomorrow. For instance, a gap up tomorrow could be a good sign to start things off with. But seeing this inside day candle tells me that this bleeding, this little correction / bleeding that we've been having for the past, like what, 2 weeks now or something like that, is, you know, it's coming to a close, at least relatively soon. Now, obviously, this can be a false alarm. It really just depends on how we react from this level now, right? But this is a good potential reversal signal for Tesla stock, which is important to understand. Now, we'll still talk about the overall levels I can see to the downside and to the upside, essentially the main resistance and support levels very, very soon. But I just want to make it clear that that's a pretty important catalyst to watch out for moving into tomorrow and even next week. So definitely keep your eyes on how we react to this inside day candle. MACD still flipped a bullish, which is good, still looking pretty solid. RSI still, it's below 50, but ever so slightly, still not looking too bad in my opinion. Stochastic is now officially resetting, right? It was obviously pretty much overbought, if you will, up here. Now it's officially resetting and it's kind of cooling off. So essentially, again, we're just cooling off the stock here, right? We're cooling off, we're relaxing, we're just resetting, which I've been saying for a while I expect to happen, and that is exactly what is happening. The band's regression has officially, of course, reset, and it's holding on the upper half of the indicator, right, of the bands essentially, which is a good sign. That's obviously a more bullish and bearish sign. The 5 and the 13 has also officially been reset, right? Remember how I talked about we were very overextended with how ahead this 5 EMA was compared to the 13 EMA, right? Well, now, of course, the 5 EMA is coming back down to the 13 EMA. You can see it's getting pretty close. And now, as long as this doesn't cross back down below the 13 or the green below the red, that's a good sign. But, you know, it coming down like this is also another way of the stock just kind of cooling off and resetting and essentially getting ready for that next move up. So there's a lot of indicators and a lot of signs that are pointing to the fact that Tesla, this correction is almost done. It's almost done, and we should be slowly starting to get ready for that next leg up. At the very least, back up into the 180s/190s, ideally to 205, which would be a very nice target to see moving forward for the next couple weeks or so. So we'll see, of course, right? We'll take it day by day, level by level, but a pretty damn good start so far here, in my opinion. Now, let's talk about, before we end off the video, the overall levels to look out for to the bottom and to the upside, right? So the bottom, the support levels to look out for that, you know, ideally the bulls want to hold and the bears want to start breaking as well. We want to lose this volume profile, and pretty much we want to start losing 170. Losing 170 pretty much means we lose the volume profile and we lose that 20-day moving average. On top of that, we have support level down here at 168.38 roughly, which is that gap fill. That's another level that can show support. And below that, in my opinion, 160s, like the 163 to 160 range, that $3 range, also very important for the bulls to defend and the bears to break, right? But those are the main 3 levels down below us I would be looking at very, very closely and eyeballing. With each one broken, it unlocks the next one, right? And so on and so forth. So keep that in mind, right? To the upside, right? We have, of course, pretty much a pretty large range, really. This kind of, you know, see-through rectangular box, if you will, that I have spreading across the chart. That's pretty much that overall resistance point, right? Which really starts even as early as about 177-ish, all the way up to about really 183, right? That's going to be the first major resistance, like this massive area of potential supply, unfortunately. So we'll have to go ahead and break through that once again with probably some catalyst. I really think some catalyst will have to come in here to break through this. So we'll see if that actually ends up being the case or not. But after that, if we do happen to break that, 185 is the next level, which is the high of this candle that we had on the 6th of May, which is not, of course, too long ago, just a few days ago, right? Breaking above that. Following that, we'll, of course, have the next high of about 199 almost, which was the high of this candle here, followed by 205. And a break above 205 gives us about 220 to 230, which is going to be that overall retest on this red line over here. Let's say on the weekly chart looks a little bit cleaner, right? Which will be essentially moving back all the way up here. But ultimately, this is not looking too bad. Even if we take the Fibonacci and go from this low over here that we had pre-earnings all the way up here to the recent high that we had that we've obviously been correcting from. You can see we're approaching that. It's kind of hard to see, of course, but let me move this a little to the side. I'll move it like this, I guess. This is not a perfect depiction, of course, but it's close enough, right? We're pretty much right almost at that 0.5 Fibonacci level, which is a pretty damn good level, right? And the 618 level is at 161 roughly, which is why those are the probably most important levels, right? We got very close to it. Again, my Fibonacci is not drawn to perfection, but it's close enough. The idea is the fact that we're pretty much bouncing off that 0.5 level roughly, even in yesterday. And that's a good spot for Tesla to find that support, to have that correction, have that retracement, consolidate, correct, find new buyers, and reignite that next bullish momentum upwards once again around that 0.5 level to as low as that 0.618 level, which is again about that closer to 160s, of course. So all in all, that's kind of what I'm seeing right now, right? I think this is a pretty damn good spot for Tesla to be in. I really do want to see it hold ideally this 170s level. That would be the ideal scenario, but 160s can still be probable and you know, good for the bulls. But losing 160 is where things will start getting more concerning, let's just say that. I very much prefer not to lose 160. That is, you know, yeah. Don't want to lose 160. Let's just say that. That's going to start making things a little bit more concerning. But nonetheless, that's kind of what I'm seeing. I think Tesla's still looking pretty solid now, especially after this correction that I've been calling out for quite some time. And I do think it's getting ready to go for that next move up and the next leg up sooner than later, potentially, than I expected. So we'll see. But all in all, thank you so much for watching. If you enjoyed, don't forget to hit that like button. Tomorrow, of course, is Friday. We'll see how the weekly candle closes, and we'll see how that weekly MACD closes as well. So all that being said and done, thank you so much for watching, and I'll see you tomorrow. Peace. Oh yeah, by the way, options flow, very, very muted, nothing crazy. Only thing that was of note was at 1 o'clock today in the afternoon, 1 million put came in for June 28th, 160 put. Other than that, pretty slow day in the options flow as well. Nothing to really write home about. But anyway, thanks for watching. I'll see you tomorrow.